Think you need a fat bank account to invest? Wall Street lied to you for decades. I learned this the hard way in Manhattan. Sitting on cash is a guaranteed losing strategy. Inflation silently eats your hard-earned dollars daily. The Fed printed trillions back in 2020. Your purchasing power dropped like a rock. You feel it at the grocery store. You see it at the gas pump. But the rich keep getting richer. Why? They put every single dollar to work. You might say you are flat broke. You think you need thousands to start. That was true 20 years ago. You had to call a broker like Charles Schwab. You had to pay massive commission fees. But the game completely changed in 2015. Apps like Robinhood disrupted the entire system. Now you can buy fractional shares. What does that mean for you? You can own Amazon with just $1. Let me tell you about a buddy of mine. Let's call him Mike from New Jersey. Mike worked a regular blue-collar job. He never had much cash left over. He thought investing was for trust fund kids. Then he discovered money market funds. Specifically, the Fidelity Government Money Market Fund, ticker symbol is SPACs. In 2023, the Fed hiked interest rates rapidly. SPACs started yielding around 5% annually. Mike decided to skip his daily Starbucks coffee. He took those $5 every day. He parked them straight into that fund. It felt like nothing at first. Just literal pocket change gathering dust. But here is the secret about compounding. It starts slow and then explodes. Those $5 started earning daily interest. The interest earned its own interest. It is exactly how Warren Buffett got rich. Buffett bought his first stock at age 11. He only had about $120. He had no Wall Street connections whatsoever. He just understood the power of patience. Let's break down how money market funds work. You give your cash to a firm like Vanguard. They pool it with thousands of other investors. They take this massive pile of capital. They buy extremely safe, short-term debt. Mostly as treasury bills backed by the government. It is basically lending money to Uncle Sam. The risk is virtually zero. Unless the United States government defaults. If that happens, we have bigger problems anyway. So your money is incredibly safe. And it remains highly liquid. Liquidity means you can cash out anytime. Need to fix your car tomorrow? You can withdraw your cash instantly. It is vastly superior to a savings account. Big banks like Chase or Bank of America. They pay you peanuts on your savings. We are talking 0.01%. It is an absolute joke. They take your deposits and lend them out. They charge borrowers 20% on credit cards. They keep the massive spread for themselves. You are getting ripped off every single day. Money market funds cut out the greedy middleman. You get the direct market yield. Let's look at the financial crisis of 2008. Lehman Brothers collapsed entirely over a weekend. The stock market tanked by 50%. People panicked and sold everything at rock bottom. That is how you permanently destroy wealth. But those parked in money market funds? They slept like babies through the crash. Their principal was safe and secure. When the dust settled, they had dry powder. They bought great companies at fire sale prices. You need skin in the game. Even if it is just a tiny amount. Start with $1 single today. The goal is not getting rich overnight. The goal is building a strong financial habit. Think of it like going to the gym. You don't bench press 300 pounds immediately. You start with the empty bar. Investing is the exact same mental muscle. Once you see that first cent of interest, it changes your entire psychology. You stop wanting to buy useless junk. You start looking for more ways to save. Let me share another real-world example. Look at Apple back in 1997. Steve Jobs had just returned to the company. They were basically 90 days from bankruptcy. A friend of mine bought shares then. He only invested a few $100s. He never touched it for 20 years. That small bet turned into a massive fortune. Why? Because he had unparalleled patience. Most people want a quick dopamine hit. They trade options and lose their shirts. Wall Street loves retail day traders. They feed off your transaction fees. The real wealth is built by holding, buying quality assets, and doing absolutely nothing. Now let's talk about expenses. Nothing in life is entirely free. These funds charge an expense ratio. It is a tiny fee for managing the money. Vanguard is famous for keeping these incredibly low, usually around 0.11%. That means you pay $11 annually for every $10,000 invested. It is a completely no-brainer deal. Compare that to traditional mutual funds. Some charge 1 or 2% yearly. That kills your long-term compounding growth. Always read the fine print before investing. The math always catches up with you. Another tool is high-yield savings accounts. Online banks like Ally or Marcus by Goldman. They don't have physical branches. No massive real estate costs to cover. They pass those savings directly to you. You can get yields comparable to money markets. Both are great places for your emergency fund. What is an emergency fund? It is your financial shock absorber. 3 to 6 months of living expenses. Because life will inevitably throw you curveballs. Your roof starts leaking. You get laid off from your job. You face unexpected medical bills. If you don't have cash, you use credit. And credit card debt is financial quicksand. So park that emergency fund smartly. Make sure it earns a decent yield. Make sure you can access it quickly. That is exactly what we are discussing today. It is about taking back your financial control. Stop letting bankers profit off your ignorance. It is time to get some skin in the game. Let's discuss a massive misconception. People think investing is risky gambling. It is only gambling if you are clueless. Buying a broad index like the S&P 500. It is betting on American business growth. You are owning a slice of Microsoft. A slice of Google and Tesla. These companies generate billions in real cash. They pay out dividends to shareholders. By not investing, you guarantee a loss. Because inflation never stops running. $100 today buys less next year. Think about housing prices in Texas or Florida. They have skyrocketed over the past decade. Wages simply haven't kept pace. The only way to bridge that massive gap is to make your money work harder. Let it sweat while you are sleeping. It doesn't complain, it doesn't take vacations. It just tirelessly multiplies in the background. So how do you actually start today? First, pick a reliable brokerage firm. Fidelity, Vanguard, or Charles Schwab are great. Second, link your checking account to it. Third, set up an automatic weekly transfer. Even if it is just $10. Automating the process removes your human emotions. You don't have to remember to do it. It just happens in the background continuously. Before you know it, you have a solid foundation. You have built a small capital base. From there, your options expand significantly. You can start buying individual stocks or invest in real estate investment trusts. But the first step is always the hardest. Overcoming that initial mental barrier. Stop saying you will do it tomorrow. Tomorrow never actually comes. You have the knowledge right now. You know the tools exist for you. The technology is literally in your pocket. Your smartphone is a wealth-building machine. Use it for more than scrolling social media. Transform it into your financial control center. Look at the data from the Federal Reserve. Over 50% of Americans lack basic savings. They can't cover a $400 emergency. Do not become part of that tragic statistic. You are better than that. You just needed the right perspective. The wealthy have gatekept this information forever. They made it sound overly complicated, using big words to scare you away. But the real deal is stunningly simple. Spend less than you earn. Invest the difference consistently. Let time do the heavy lifting. That is the entire secret to wealth. No magic formulas, no shady algorithms. Just discipline, patience, and starting small. So here is your action plan. Take out your phone right now. Download a reputable brokerage app. Open an account. It takes 5 minutes. Transfer $5 today. Buy a fractional share or a money market fund. Congratulations, you are now an investor. The journey of 1,000 miles begins with a single step. Your financial future starts right now. Let's talk about market downturns for a minute. When the market bleeds red, people panic. They hit the sell button out of pure fear. But the rich view market crashes differently. They see it as a massive clearance sale.
Perfect.
Imagine walking into your favorite clothing store. Everything is suddenly marked down 50%. Would you run out screaming in terror? No, you would back up the truck and buy. The stock market is the exact same thing. When prices drop, it is a buying opportunity. But you can only buy if you have cash. That is why keeping some liquidity is crucial. That money market fund we talked about. That is your ammunition for bear markets. You deploy it when everyone else is crying. That is how generational wealth is created. Let's discuss a major pitfall to avoid. Trying to time the market perfectly. Even the smartest guys on Wall Street fail. You cannot consistently predict the short-term movements. Instead, use a strategy called dollar cost averaging. It is a fancy term for a simple concept. You buy a set amount every single month, regardless of whether the market is up or down. When prices are high, you buy fewer shares. When prices are low, you buy more shares. Over time, it perfectly balances out your risk. It completely removes the stress of timing. You just stick to the relentless schedule. Think about your future self 10 years from now. Will they be glad you bought another pair of sneakers? Or will they be glad you bought an index fund? Every dollar you spend is a trade-off. You are sacrificing future freedom for temporary pleasure. The media wants you constantly consuming. Advertising agencies spend billions to hack your brain. They want you permanently trapped in the rat race, living paycheck to paycheck with zero safety net. But you can choose to opt out today. You can reclaim your financial independence. It requires shifting your mindset completely. You are no longer just a consumer. You are an owner of capital. You provide the fuel that drives the economy. And you demand a fair return on it. Don't let anyone tell you it is impossible. The barriers to entry are completely destroyed. The financial world is open to everyone now. But you have to take the initiative. Nobody is going to do it for you. Your boss isn't going to make you rich. The government isn't going to save you either. It falls entirely on your own shoulders. And honestly, that is incredibly empowering. Because it means you are fully in charge. You control your own destiny. Start with that single dollar. Watch it grow, learn the mechanics. Read books, listen to solid podcasts. Educate yourself relentlessly about finance. The more you learn, the more you earn. This is the greatest game on earth. And you finally have a seat at the table. So don't waste this massive opportunity. Take action right now, today. Set up that account and make your first deposit. It will change the trajectory of your entire life. Keep pushing forward and stay incredibly patient. Wealth is a marathon, not a sprint. It is built one brick at a time. Let's wrap this up with a final thought. Your money is a reflection of your priorities. Align your spending with your long-term goals. Stay focused and ignore the daily noise. Protect your capital and let it compound. You have all the tools you need. Now it is time to execute the plan. Start today. No more excuses. Get into the market right now. Your financial future starts right now. It is entirely in your own hands.